Welcome back to Beyond the Numbers. I'm Bev Wakefield, and this is the podcast where we take the stress out of business finance and break down the numbers in a way that actually makes sense. Today, we're asking a biggie. If your business stopped tomorrow, how long could you afford to keep living your current lifestyle? How do you build a business that pays you well now and sets you up for the future? Not just short-term income, not just next month's pay, but a business that becomes a real asset. Because let's face it, too many business owners are stuck in the cycle of feast and famine. Or worse, they've built a job, not a business. So today we're looking at what it really means to make your business pay you now and later. If your business only pays you when you're working, you don't have a business, you have a job with invoices. This episode is all about getting off that hamster wheel, creating a business that delivers income you can rely on now, freedom later without working forever, and value you can one day sell or step back from. Because too many of us get stuck in the now. But you deserve both. This shows up in a way that feels familiar. You take money out when you can, not when you should. You feel like the business needs to grow before you can pay yourself properly. And you know you should think about pensions or exits, but it all feels like a later problem. And that's the trap. When there's no clear system for paying yourself and no plan for later, you're left guessing, hoping, and hustling. Let's look at a real life example. One client came to me after running their business for 7 years. Revenue was solid, profit was okay, but their personal finances were a mess. Why? Because they only took money when there was any left over. No pension and no future plan. So we worked backwards. We defined what they needed now to feel secure and built in consistent owner pay, using our pay yourself first method from episode 3. We created a strategy for their freedom number, the amount of wealth they needed to stop relying on the business. They didn't just get a pay rise, they got a retirement plan. So let's break this down into 2 parts. Firstly, how to pay yourself consistently now. Make owner pay non-negotiable. You are an overhead. Add yourself to the monthly costs. Use recurring income where possible, retainers, memberships, or consistent client work, which will help smooth cash flow. And then build in a buffer. Aim for 1 to 3 months of business expenses in reserve so you're not relying on every invoice being paid on time. Check your margins. If you can't pay yourself, it's a pricing problem or perhaps a cost issue. You might need to increase prices or cut the fluff. Now let's think longer term, because the business can be your biggest asset if you build it right. Start by knowing your freedom number. This is how much you need invested or saved to walk away. Maybe it's 500k in pension, ISAs and assets. Maybe it's 1 million, but you need to start with a number, not a guess. Then increase the value of your business. Whether you want to sell or just step back, get yourself out of the day-to-day. Systemize delivery, build a team or support network, and make cash flow predictable. Buyers, investors, and even your future self will value that. Don't just extract, invest. So paying yourself is step 1, but once you've got that covered, start diverting surplus into pensions, investments, or even business growth that doesn't rely on you. Now let's take a look at what this could look like in your business. So to give you a guide, the Pension and Lifetime Savings Association Retirement Living Standards Study conducted at Loughborough University has a range of earnings that are considered starting from $13,000 minimum for one person to a comfortable lifestyle at $44,000. Let's say you want £5,000 a month to live well in the future. That's £60,000 per year. To figure out how big your retirement or investment pot needs to be, we use something called the 4% rule, sometimes also presented as a 5% withdrawal rate. Here's how it works. The rule assumes you can safely withdraw 4 to 5% of your investment pot each year in retirement without running out of money. So if you need £60,000 per year and you're planning on a 5% drawdown rate, we do 60,000 over the 5% or 0.05, which gives us 1.2 million. Whether that's in pensions, ISAs, investments, or proceeds from a business sale, that's the number you need to fund a 60k per year lifestyle. So if you assume 4% as a safer withdrawal rate, especially in turbulent markets, you'd need £60,000 divided by 4%, so 0.04, equals 1.5 million. That is your freedom number. It's not about hitting 1 million for the sake of it, it's about knowing what's the pot I need to make work optional. From there, you can plan what portion will come from pensions, what from a business sale, and what from property or other assets. And here's the reassurance. If you did have 1.2 million and drew down 5% a year, that's £60,000 annually, and assuming your investments continue to grow at around 5% annually, the pot stays intact. You're living off the growth and you're not eating into the capital. So in theory, that 1.2 million could last indefinitely, or at least 30 plus years, depending on market returns, fees, inflation, and of course, life expectancy. So start with the end in mind and work backwards, just like we did with your happiness number. That's your freedom number. It could come from a business sale, pension, property, or all three. And if you want to step back and earn passively from the business instead of selling, make sure it can generate that profit without you showing up. So let's look at my top tips for achieving this. Start by splitting your goals. What's for now and what's for later. Use your accountant, structure your pay and pension tax efficiently. And audit your business model. Are you building value or are you just chasing revenue? And review this annually. Recalculate your freedom number and check if you're on track. And finally, protect your profits. Don't let growth eat margin. Now, you need a business that pays you now and sets you up for later. So prioritise regular owner pay, start small, grow with consistency. And get clear on your freedom number and your future goals. Start building value into your business, not just turnover. Because true success isn't just income, it's freedom. It's knowing that the thing you've built can serve you today and tomorrow.